Hello, welcome to another video here on our podcast. During this video, we'll be particularly interested in discussing how cognitive biases they affect our decisions when we are in the crypto market. So, in the previous episode, we talked about the psychology of the market, and in this video, we talk about how cognitive biases also can affect us, and we will discuss the confirmation bias, but also we discuss how the sunk cost fallacy as well they affect us in discussing how our decisions in the market they could be plagued by cognitive biases. I don't know how you feel about discussing this topic.
Yeah, it's interesting. I mean, if you were with us on the last episode, we looked at the psychology of the market, and markets are based on human emotion. So the psychological aspect is massive. So it's a really interesting topic that we're going to look at together, and I'm sure you're going to explain it really well. So we'll also link that with Bitcoin and the rest of the space, especially over the next couple of weeks with the Bitcoin bull run. I think it's going to play a massive part of the psychology. Yeah.
So now let's start discussing the confirmation bias. So with confirmation bias, we try to confirm to ourselves that a decision that we took is the best one. And so we try to look at evidence within what is happening to confirm to ourselves that we took the best decision. Let's give an example. So I buy a coin, and then I want this coin maybe to go 10x.
Yeah.
So even if the market moves, you still want to hold on to that belief that this market, that this coin will go up.
Another 10x.
Another 10x. Because you still want to confirm to yourself that the decision you took is the best one. The downside of this cognitive bias is that even if the coin is losing its value, you are oblivious to what is happening because you are still you want the initial decision that you took to be the best one. I don't know if what I'm saying is making sense to you.
Yeah, I mean, again, it's the psychology of you're holding on to something because you believe it's going to go even higher, and you're like, okay, tomorrow or next week it's going to keep going, it's going to keep going, it's going to keep going. So you're convincing your brain that it's just going to keep going up.
Exactly, that's the thing. Like, you don't want to accept that you are wrong.
Yeah.
So you confirm to yourself that the initial decision that you took is the best one. So whatever is happening in the market, okay, you avoid the negative part or whatever that will affect your decision negatively, and you want to keep on to yourself that what I did is the best decision I made.
So how is this linked then? I get your point, yeah.
Yeah, so here, let's suppose that I bought my coin here.
A disbelief.
And a disbelief. And then we come to the euphoria part.
Yeah.
Then I'm happy because I say that, oh, this coin I bought was the best decision I took.
Well, like it says here, I'm very pleased with my investment.
Exactly. Then maybe after, let's suppose that, this coin start to lose its value. There are two things. We can either decide to sell or hold on to that coin, right? But because maybe initially we say that I want to make it 10x, but maybe the coin hasn't really moved to the 10x, we still hold on to that coin.
Yeah.
But then what happens? The coin start to lose its value. Maybe we come back maybe to this period.
So we hold on to it all the way into the bear market.
Exactly. And but here we are showing the graph.
And we're holding on to a bag of absolute rubbish.
Here we are showing a graph of Bitcoin, though. It's not really the case. But for some coins, we hold on to that coin until the coin loses completely its value.
Yeah.
So that is the trick of a confirmation bias. So we really want to confirm to ourselves that we took the best decision.
Everything is okay.
Everything is okay. We try to even avoid alternative solutions or try to consider alternative options to that decision that we took, to the point that we could eventually lose our initial investment.
I mean, we basically go into a depression, and you say, how can I pay all these new things? My retirement money is gone. I'm an idiot. And then you keep repeating this until you're broke.
That's the thing. That's the thing with the confirmation bias, because we tend not to take all the this other point into consideration with this confirmation bias. So it could negatively affect someone who is new into the market. So it's really good to know that now it's a bias that we do have, that we all do have, and it's good to be aware of it. And the way we can mitigate this one is to outline a strategy before going to the market.
I think as well, one of the best things you can do, it's not easy, is you have to be robotic in the market. You have to change your mindset, and you can't be emotional. If you have emotions, then you're going to wreck yourself and you're not going to make anything. So you have to be robotic and just set a plan, like you just said. Even write it down and stick to the plan. Be robotic. Do it, repeat, do it, repeat, do it, repeat. It's easier said than done because we're human, and we get, our emotions go fly, especially when it goes parabolic. That's when your emotions, you'll be waking up, looking at your phone, looking at your portfolio, and you're up another 2x. The day after, up another 3x, 4x, 5x. So when are you going to hit the stop button?
It's very interesting. I think that you can determine how good is your strategy when the market goes down, because then you have to ask yourself, what do I do? Do I keep on to it, or do I sell some? So for me, like, the bear market is really the point where you can really evaluate the strength of your decision making.
Yes. So for example, right now, over the last 6 months, we've been pretty much sideways action. I believe we're going to go up above 100K, 6 figures. But again, that's my emotion.
Exactly.
So is it going to go above? Is it 100%? Nothing's 100%. Could this be the beginning of the end? I don't think it is, but again, emotion comes into play.
And it's good to have a clearly defined strategy to say, if it goes up, maybe I buy. Or if it goes down, maybe I sell. Or either way. But at least to have a strategy clearly defined, so that whatever happens to the market, you can quickly adjust your strategy, taking into account your initial investment as well.
That's why for most, again, everything we're saying is not financial advice, but dollar cost averaging, DCAing, is probably, for me, the best. It's the most boring. It's the most robotic, but like we just said, robotic is best method, but it works.
Yeah, it
works
does.
for most.
It does. Yeah, being robotic, as you suggested, writing everything down. And then also something else that's very interesting as well is to diversify in sports portfolio. Like, okay, let's say that I'm sure that this coin will go 10x, but also on the side, I can also buy another coin, and that way, if maybe the coin A loses part of its value, maybe coin B will do better.
Yeah, you're not going to get every single coin correct. Personally, I don't buy more than between 10 to 15 different coins. It's nice to have a basket, but diversify is very good because you don't know which one is going to outperform the other. But at the same time, you don't want too many.
For sure. Yeah.
But it's just my strategy.
And another thing also to mitigate against the confirmation bias is to be aware of what is going into the market. Right? You took a decision, maybe taking into consideration some facts, but as the market changes, evolves, you want to add to your decision making other elements, other factors that could affect your decision, your coin going in one or the other direction. And in one of our previous podcasts, we talked about XRP. If someone bought XRP, confident that XRP will do 10x, but then there is this court case that happened in the middle. What happened? You have to adjust your decision making by incorporating the new events that are happening within the market. I don't know if my explanations are making sense.
Yeah. I mean, for the XRP video, we did that last week, so go check out that video all about XRP and our price prediction and the potential it has. But yeah, I see your idea there, XRP.
Now let's talk about another bias that could also affect our decision making. For me, when it comes to biases, I think this is maybe for me the number one to discuss is the sunk cost fallacy. I don't know if you've ever heard about it.
No.
With the sunk cost fallacy is that we tend to still invest in a decision we made
months ago.
And we continue to invest in that decision because we want to gain back what we lost. Again, to make it clearer, let's suppose that we invest in coin A, and maybe coin A has lost 10% of its value. And let's suppose that the market is indicating that this coin will maybe completely disappear. Maybe we start hearing that the project is bad, the management of the project is bad. But we keep on investing in this coin because we want to gain back the 10% that we've lost.
Yeah, what you've lost,
and that's they call it the sunk cost fallacy, because the cost that you lost, you tend to think that I can gain it back by keep on investing in the project. And eventually what happens is that you lose everything.
So it's like when you go, for example, to illustrate, if somebody goes to a casino and they bet, they're betting, it's an addiction, and then they think, oh, I've lost this, but I'm going to play again because I can win it back.
Exactly.
But they just keep betting and they're losing, but they say, oh, maybe next time.
Until eventually
they've got no more money.
Exactly. So, I mean, both biases, the confirmation bias and the sunk cost fallacy, they are all related in some way. But we can really see how they could trick our brain in our decision making. So to mitigate against all these biases, we really want to be aware of these biases first. We can even want to see how we do in other aspects of our lives, because these biases, they don't only affect us when we're talking about crypto, but also they affect our decision making in all aspects of our life. And we really want to see how we are doing in regarding those biases, and they can help us to adjust our decision making.
Yeah, I mean, we have many examples of that. I was just looking at ApeCoin and other cryptocurrencies that have done that. You buy in, and then it dumps, and then you buy here because it's going back up, and you think, okay, I'm going to keep adding money. But eventually, over the course of the last few years, I mean, I think ApeCoin will come back strong. Maybe it won't be $40 or whatever, but you just keep holding on. It's bleeding. Bleeding out. And you just you're burning your own money.
Exactly, yeah. Until the point that, you can't even go to a market anymore.
Because you have nothing to put in.
That's the thing. I think that generally people, some people they criticize the cryptocurrency space because when they think about it, they only think about the negative experience that they've had, or people maybe they keep on investing until the point that they've lost everything. But I guess maybe just also being aware of the cognitive biases that could also affect our decision making. I mean, this decision making biases, they don't affect us only when we are talking about crypto, but they also affect different aspects of our life, as I mentioned earlier. But just being aware of these biases, they could really help us to take decisions and strategies that could help us to mitigate against these biases.
Yeah, if you have a bad experience or you make a mistake, we all make mistakes in crypto. Use it as a springboard for more success in the future. Learn from it. Don't just exit everything and say, that's it, finished, all crypto is a scam. Just learn from your mistake, stick with something, and then move forward.
Yeah, exactly. That's a good advice we can give to anyone listening to us. The crypto space is like everything we do in life, actually. We are talking about investing in crypto, but also the same thing investing in stocks. But we just want to make sure that the decisions we are taking are the best one. And sometimes we get it right, and good for us. Sometimes we get it wrong, and when it does happen, we want to be proactive and taking other decisions that could really help us to be successful on the long run, because life is about taking decisions. Sometimes we get it right, sometimes we get it wrong, but on the long run, we want to be successful, and that's what matters. And it's true, these biases sometimes could negatively affect us, but we want to take we want to take other decisions that could really help us to be successful at the end.
So my next question for you then is, where are you in the market? Are you going to start buying, Eda?
I mean, that's an interesting question. I mean, for some time, I thought that the market was at its highest point, and so that's why I sold some of my assets. But then now, looking back, I don't think that it was a mistake, because the market was lower at a certain point, and then at the beginning of the year, the markets went a little bit higher.
A lot of those coins are still in bear market territory. I mean, they haven't pumped yet. So
I think that the altcoins haven't pumped.
So if anybody's listening, you're probably the last chance, again, not financial advice, but the last chance to jump into altcoins for this cycle.
Yeah, that's could be.
But that's my psychology.
That's just maybe you're really tricking you, but no, I'm joking. But even myself, it's true. I made a decision at the beginning of the year, taking into consideration what I knew of the markets, also taking into consideration how the market was going. But now I'm kind of reevaluating the decision I made, and I don't want to make the mistake of just staying out of the market for too long either, because that way I just seen out.
When are you going to get in?
That's an interesting question. But maybe just stay tuned. Maybe I will disclose to you when I will get in again.
So I know you're a very rich man. So
yeah, the podcast will make me rich.
Yeah, maybe.
Yeah. But anyway, we hope you enjoyed this podcast where we try to discuss some cognitive biases that could affect our decision making in the crypto space. Let us know in the comment also if there are some other cognitive biases that you will want us to discuss, because the sunk cost fallacy and the confirmation bias are not the only biases that do affect us. Other biases also do affect us. And let us know in the comment if you want us to discuss other cognitive biases that could affect our decision making.